All right, mates, it is late October 2025, and prediction markets are making a roaring comeback, this time on-chain. From Polymarket and Kalshi to Farcaster mini apps like Ponder and Bracky, everyone is betting on what happens next, literally. But before we dive in, did you know 40% of you listening are not following us? Come on, guys, hit that follow button, collect our episodes on pods.media. Let's fucking go.
Okay, let's unpack this. Looking at the sources, prediction markets aren't exactly new, are they? I mean, they've topped up before, often got shut down by regulators, or just kind of fizzled out technically. We've seen these cycles.
Absolutely. Enthusiasm, then collapse. It's been a pattern.
So now it's late 2025. They're back big time, on-chain. Incredible volume, loads of engagement. What's actually different? What's the fundamental shift here? What did they solve?
Well, what's really fascinating, and the sources make this clear, is that it's not just the same old idea with blockchain tacked on. It's really about three things coalescing: community intelligence, genuine crowdsourced forecasting, and social engagement, but with real stakes involved.
Real stakes. Yeah. And if you boil it right down, the summary that hits it perfectly is betting has become building.
Betting has become building. Okay, that flicks the script, doesn't it? Changes it from just, gambling to maybe a transparent way to find some kind of decentralized truth.
Exactly.
Thinking back to those historical failures, was it mainly regulation killing them off? Or was the tech itself, like high fees, slow settlements, was that the real blocker that stopped high-volume trading?
It was definitely a mix, a pretty lethal one.
Yeah.
But yeah, the tech limitations were huge. You had the regulatory uncertainty, and you had all this friction just trying to make a trade.
Right.
What we're seeing now, this comeback, it's powered by a fusion that kind of solves that friction part. You've got DeFi mechanics, real-time forecasting tools, and crucially, deep social media integration.
The Web3 stack basically providing the pipes they never had before.
Precisely. The infrastructure finally caught up to the idea.
And the scale now is, well, it's impressive. Polymarket is a great example, right? Leading the crypto native side, hitting record volumes. We're talking millions in open interest on things like elections, AI timelines, crypto prices.
Yeah, Polymarket is definitely the big global decentralized player right now. But it's also super interesting to look at Kalshi. They're coming at it from like the opposite direction.
How so?
They're really focused on bridging TradFi, traditional finance, with Web3 efficiency. Heavy focus on regulation, especially in the U.S., trying to bring in that institutional legitimacy,
Okay, so Polymarket is crypto native freedom, Kalshi is regulated bridge. But you mentioned social integration. That feels like the really new Web3 part, especially with Farcaster. Can you break that down? What are Ponder and Bracky doing inside Farcaster?
All right, so Farcaster, first off, is basically a decentralized social network protocol. Think like a user-owned Twitter or X.
Got it.
Within Farcaster, they have this feature called frames. And a frame is like a mini app living inside a post. So you're scrolling your feed, and instead of just seeing text or an image, you see a prediction market question directly in the post.
Ah, so you don't click a link to go to the market?
No. You interact right there. You see the question. You cast your take, yes or no, whatever you vote. You can even stake your tokens, all without leaving the feed.
Wow. Okay, that's frictionless. The market is the social content.
Exactly. The sources literally call it the on-chain playground for truth, speculation, and social data. That deep integration, removing all those clicks and steps. That's why the volume is taking off there. It's instant.
Let's get into the mechanics a bit. Say I'm on Ponder in Farcaster, or maybe Polymarket. What am I actually buying when I make a prediction? How does that turn into a forecast?
Okay, so you're essentially buying shares in a specific outcome. Let's take a simple yes-no question. Will AI Regulation X pass by Q1 2026? You can buy yes shares or no shares. Typically, the market starts with both priced at 50 cents. Now, as people start buying based on what they believe, the prices shift. If loads of people buy yes, that share price goes up. Maybe it hits, say, 85 cents.
And the no share goes down to 15 cents.
Exactly. And that 85 cents, that's the market's collective real-time probability assessment. It's showing an 85% belief, backed by actual money, that the outcome will be yes. It's where the crowd puts its capital, not just its opinions.
So the price chart is the forecast. It's sentiment, but with skin in the game.
Precisely. And for this to work smoothly, especially with lots of trades, the underlying tech needs to be basically invisible, fast and cheap.
Which is where stablecoins and layer 2s come in, like Base and Optimism.
Absolutely critical. Those L2s, layer 2 scaling solutions, are what make this possible now. You need near-instant settlement and really, really low transaction fees.
Why couldn't this just run on Ethereum mainnet?
Cost and speed. Prediction markets thrive on frequent trading, sometimes small amounts.
Mm.
If each trade costs you 5, 10, 20 bucks in gas fees like it could on mainnet,
The market just dies. Nobody trades.
right, L2s bring those costs down to pennies or fractions of a penny. That enables the high-frequency, high-volume trading you need for the price to be a genuinely liquid, accurate signal. It lets us, as the sources say, trade information as truth traded as liquidity.
Truth traded as liquidity, that's a powerful concept, turning information into an actual asset class.
Okay, here's where it gets really interesting. Beyond just the betting aspect, why should someone listening, maybe they're building a product, maybe they're a creator, why should they care? What's the so what for them? The so what is huge, I think. It's because prediction markets offer this fundamentally new way to measure belief and consensus.
Mm.
It's transparent, it's backed by money, and it's actually quite hard to manipulate compared to, say, a Twitter poll.
Because manipulation costs real money.
Exactly. You have to put significant capital down to shift the market price meaningfully.
Okay, so give me specifics. How would a product builder use this?
Right, for builders, this is like having a live, verifiable focus group that puts its money where its mouth is. Instead of just asking people if they'll use your feature, you can see if they're betting on its success, or betting on your launch date hitting target,
Or betting against a competitor.
or betting against a competitor. It's real-time risk assessment. It's seeing community expectations backed by capital, not just survey answers. Powerful insight for your roadmap.
Okay, that makes sense. And what about for creators? They're always looking for engagement.
Oh, for creators, it's potentially revolutionary. It takes something flat, like a regular poll, and turns it into what the sources call polls with skin in the game.
Polls with skin in the game. I like that.
Imagine you're an artist dropping NFTs. You could run a market asking fans to bet on which piece sells out first. It drives interaction, sure, but it also gives fans a tangible stake. It monetizes the conversation in a new way. It really leans into that idea of information as an asset class that boosts community engagement.
And for bigger players, institutions.
Well, for institutions needing reliable, forward-looking data, these markets could become a really valuable high-integrity feed. It's real-time sentiment, arguably less gameable than some traditional metrics, precisely because of that cost to manipulate.
Okay, this whole shift from betting to building hinges on the tech working and the key players. Let's quickly recap who's driving this.
Right, so you've got clear leaders emerging. Polymarket is kind of the global, crypto-native, let's make a market on anything leader, decentralized focus.
Right.
Then you have Kalshi, laser-focused on the U.S. regulatory side, trying to be that compliant bridge for Wall Street and institutions.
Very different approaches. And the social side.
That's where Ponder and Bracky come in, really pioneering this stuff inside Farcaster frames, proving that embedding markets directly into social feeds works and drives adoption. That's key.
And are traditional players dipping their toes in?
Yeah, we're seeing experiments like Truth Predict from Truth Social, but honestly, the real engine underneath all this, the thing making it possible, is that L2 infrastructure, base, optimism. They provide the cheap, fast rails. Without them, this comeback just wouldn't be happening at this scale.
It sounds almost inevitable, but let's take a critical look. The tech might work, but what are the big hurdles, the major roadblocks we should expect in the next, say, year or 18 months?
Okay, yeah, this raises an important question. How do these things actually scale into the mainstream without hitting major walls?
The biggest one seems obvious. Regulation, that regulatory limbo you mentioned. What does that actually mean day to day for these platforms?
It means nobody really knows how to classify these things yet. Are they securities, so subject to SEC rules? Are they gambling, subject to gaming commissions? Or, and this is a tricky one, if the market is about politics or speech, is it protected free speech?
And that uncertainty is dangerous for the platforms.
Hugely. They don't know which rulebook to follow. And regulators can potentially come after them for being unregistered securities platforms or unlicensed gambling operations. We've seen that shut down markets before. It's a massive cloud hanging over them.
So, legal ambiguity is number one. What about the tech itself, ensuring it's trustworthy?
Technical integrity, absolutely crucial. If you're betting serious money, you have to trust that the outcome reported to settle the market is correct and tamper-proof. This relies heavily on oracles.
Oracle's the things that bring real-world data onto the blockchain.
Exactly. Decentralized oracle networks are supposed to provide that data securely. But if the oracle fails, gets manipulated, or just isn't accurate, the whole market falls apart. Trust collapses. So proving the robustness and security of that oracle layer is non-negotiable for handling high-value markets.
And then there are ethical questions, right? Markets on sensitive topics. But beyond the morality, if this data is so valuable as a consensus signal, Won't big players, institutions, maybe even governments, try to manipulate these markets to shape that signal?
That's the million-dollar question, isn't it? And the honest answer is yes, they'll probably try. Manipulation is always a risk.
But you said it's harder here.
It is significantly harder and more expensive than manipulating a poll or hashtag trend because you're pushing against real capital in a liquid market. But it's not impossible. The key is in the market design itself. The algorithms, the automated market makers, or AMMs, they need to be built to resist sudden manipulation attempts. And ultimately, it comes down to user trust. Users need to believe these are tools for insight, not just casinos ripe for manipulation by whales.
Okay, so assuming they can navigate the regulations, prove the tech integrity, and build trust. Let's look forward again. Where do the sources see this going, especially within Web3 social?
The big vision is that prediction markets become essentially the native engagement layer of Web3 social.
Native engagement layer, meaning
Meaning not just niche apps like Ponder on Farcaster, but deeply integrated everywhere. Think prediction market widgets inside your crypto newsfeed, integrated into DAO governance votes, maybe even in your work tools to gauge team sentiment on project deadlines.
wow, everywhere.
Everywhere, belief needs to be measured. The timeline suggested is maybe within a year or so for much wider embedding. They become the standard way communities signal consensus.
And AI's role in this, sources mentioned that too.
Yeah, AI is expected to play a big part in refining these markets. Think AI analyzing market odds against news flow, social sentiment, historical data to potentially spot inaccuracies or opportunities.
Making the forecast smarter?
Smarter, more efficient, maybe even personalized market suggestions, helping the crowd become even wiser, essentially. But the early signal, the proof of concept for this social integration, is definitely what's happening on Farcaster right now. That's the template.
Okay, let's try and synthesize this. What's the overall takeaway? Are on-chain prediction markets here to stay this time?
The consensus from the sources seems to be, yeah, they've likely found real product market fit now. Being on-chain solves the old tech problems, cost, speed. Being social solves the adoption and engagement problem. It feels like they're finally delivering on that crypto promise of open access to information and collective intelligence, but with financial incentives.
And the social aspect is key.
Absolutely. We're definitely bullish based on the sources on that social layer, the Ponders, the Brackies, blending markets with memes and conversation. That feels like the path to scale. The huge challenge, though, is scaling up that credibility and navigating the regulatory minefield without getting shut down.
Yeah.
If they manage that, well, betting on belief could just become how we measure truth online.
So what does this all mean? Our sources seem to conclude that truth is no longer a poll, it is a market, and maybe every take you see online could soon have a price attached, a market reflecting belief in it. If that's the world we're heading towards, where every opinion, every statement potentially has a live market price, how does that shift your incentives? Your incentive to share information, to participate in public discussion? Does putting a price on truth make the signal clearer, filtering out the noise? Or does it just make the signal louder for those with the money to shape it? That's your deep dive for today.